would have failed. Alright, so what's good everyone, welcome to a new YouTube video. In this YouTube video, we're going to be breaking down how I caught just over 150 points, about a 1 to 8.62 RR, and how I made just over $33,000 copy trading on Tradecopia. If you want to try Tradecopia for yourself, feel free to check the description of my video. In there, I'm going to be leaving a link to Tradecopia. Use that link, use code FEAR. You can get 1 to 2 weeks for a free trial alongside a 30% discount. Regardless, in this video, we're going to be breaking down everything in regards to the trade I've taken today in terms of narrative, why I took shorts at a high of the day, and just breaking down every little aspect so you guys can learn how to apply this yourself going into future 30-minute power threes. Because again, the whole basis of this trade was trading 930. 930 is a new 30-minute power three. It is what majority of my trades are taken off of, and the more and more I make these videos, the more and more you understand, the more and more you'll be able to implement them yourselves. And now we're going to be showing you guys the trade recording and then breaking down everything after that. So catch you guys all then.
Windmill for the land, I'm forever hand in hand. Take it all, live on your stride. It is taking, falling down. Love forever, love is free. Let's turn forever, you and me. Windmill for the land, is everybody in.
Laughing gas, these hazmats, fast cats, lining them up like ass crack. Ladies, ponies at the track, it's my chocolate attack. Shit, I'm stepping in harder this year. Yeah, bear repping in harder this year. Watch me as I gravitate. Ha 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 ha. We gon' ghost town, this Motown with your sound. You in the blink, gon' bite the dust, can't fight with us. With your sound, you kill the ink. So don't stop, get it until you chat it. Hit it. Watch the way I navigate.
Windmill for the land, I'm forever hand in hand. Take it all, live on your stride. It is taking, falling down. Love forever, love is free. Let's turn forever, you and me. Windmill for the land, is everybody in.
Don't stop, get it. Deep high, your captain's in it. Steady, watch me navigate. Don't stop, get it. Deep high, your captain's in it. Steady, watch me navigate.
All right, so hopefully you guys all enjoyed that trade recording. Now we're going to get into the first thing, which is my pre-market analysis. Essentially gauges how or what I was thinking going into the morning and so on. So going into the morning, the overall basis of what I was saying here is that on the higher time frame, I'm 50-50. It's a sort of a new month. It's a sort of a new week. Higher time frame generally is bullish. However, on a more middle time frame, we do have an unmitigated new log from last week. We have an open gap in the market. And if we understand that, we can understand that we have the possibility, the likelihood of manipulating down to that unmitigated new log. And just for reference, that is the one all the way from last week down here. So this unmitigated gap is likely to be traded into. And so the basis of looking to shorts today is that on the higher time frame, we want to see price return down into there. And then of course, we have to understand on a lower time frame what actually supports that. And more directly going into New York Open, I was stating that we had SMT with the previous day high, SMT the previous 6-hour high, and I said I'm going to trade based off of what New York Open does. As of now, I'm 50-50, but regardless if I'm going to long or not, I would need to see NQ return to discount, a concept I can't talk about on a YouTube video, and then slash the 2-day open. So initially or immediately going into New York Open, my mindset was lower before higher. So even if I was going to long today, I needed to see NQ return to the 2-day open slash EQ of the overall daily range, which we can identify by drawing the daily low to the daily high. So discount of the range, 2-day open. Mindset was lower before higher. And when I say 50-50, that means whether or not we get a valid setup at New York Open. If we don't get a valid setup, we just displace lower without a valid setup, then we'd be looking to long. If we do get a valid setup at market open, then we can look and validate a short. And that leads us to market open. So market opens, go back here to 9:30. And the very first thing we have to cover is just understanding the higher time frame, because we talked about earlier that higher time frame is bullish, middle time frame is 50-50, lower time frame was bearish. And when we understand the market, in the sense of we are constantly rebalancing, and we're constantly either delivering higher, delivering lower, consolidating, or rebalancing, so on and so on. Right now, when it comes to a rebalance, what does a rebalance actually mean? Well, a rebalance is needed when we either lack sell side or buy side delivery. And when we zoom out on the higher time frame, or I guess when we just go in the daily time frame, look right here, the gap from last week, the last week's new log, that is a place in the market in which we lack sell side delivery. As you can see here, we displaced higher, and this is above all-time highs. We displaced higher, and no sell side delivery whatsoever can be found within here. Oops, why does it do that? No sell side delivery can be found within there. It's just a gap in the market. It's a literal gap. It's inefficient price action. And by understanding this, we can understand that even if the market is going to go higher at some point in time, whether that is this week, which is ideally going to be the case, next week, or so on and so on, we need to return into there. And you may be thinking, but fear, we've made gaps in the market before, such as back here, Monday, this new log from all the way back in May, or perhaps this new log all the way back in April. What's the difference between these right here and the one all the way up here? The difference is we had both sell side delivery, which is back here, we had sell side delivery back here, and buy side delivery right here. So these gaps in the market right here and here, those are fine because they already have sell side and buy side delivery. The difference between those right there in discount of the range and this one right here above all-time highs is the fact that there is no sell side delivery whatsoever. None. The most recent sell side delivery that we had was all the way back here. So in the higher time frame, realistically speaking, we should generally return back to this new log and potentially even below it, because the last time we had sell side delivery was all the way back here. We just displaced above, and that's it. So realistically speaking, when it comes to the Weekly Po3, a most optimal scenario for this week, and we'll just show one singular chart. Most optimal scenario for this week is that we return into that new log. You know, classic bullish Weekly Po3 profile. Accumulation, manipulation, and, you know, depending on what setups, potentially higher time frame SMT, distribution. Now, this might not all happen this week. It might happen over the course of this week, and then the next week distributes, this week manipulates. It depends on what we're given. But overall, the basis of the day is to start the initiation of price returning to this new one back here. So this was my mindset going into the day. And now what actually supports that? Because obviously we can't just short just because we think price needs to go lower. No, this is on a higher time frame scale. On a lower time frame, we actually need to see proper confirmations. And that first confirmation, which we can go over, is this. What do we see YM do that NQES both failed to do? That is run out the previous day high. NQES will fail to do so, while YM does. Technically, YM did all the way back here. So YM runs out the previous day high, NQES does not. And this was a mistake that a lot of people have made. They see relative equal highs, they think price is going to run that out. No, 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 no. And the reason that they're likely to think that is because they're so focused on NQ versus ES. They forget to implement YM. YM ran out the previous day high. That immediately not removes a possibility, it's always a possibility, but it removes the likelihood of NQ or ES running out the previous day high, because YM already did. Especially when on the higher time frame, our narrative definitely can be bearish. And something I should have gone through before was the development of our daily power 3. Within our daily power 3, we have the exact same thing this week with this new dog as we had last week. Now, obviously, we have sell-side delivery right here, but nonetheless, it doesn't change the fact that it's a little gap in the market. And we open up, we accumulate, we manipulate. End of the manipulation, we have SMT, the previous day high, my bad. Previous day high on a more lower time frame scale, overnight highs or here. There's a more specific term for that, but we'll just keep it simple. SMT, the previous day high, SMT, the previous, or we'll say the overnight high, daily power 3 profile. Going into 9:30, classic accumulation manipulation, classic open high, low close. So it's looking very clear that we're setting up to be bearish. Again, accumulation doesn't have to be perfect. Manipulation doesn't have to be perfect textbook wise. This counts as accumulation. This counts as manipulation. And what confirms the end of the manipulation? SMT. So now we have SMT, the previous day high, SMT with our overnight highs. And now on a more lower time frame scale, even below there, we now have, we'll actually go up to 9:30. Where I take my trade, we now have a data high, data low. But fear, our news isn't until 10 a.m. Guess what? There's other types of data highs and data lows. And this type of data, this type of news is only going to be found on places like Financial Juice, BlackRock, all that. Or perhaps it's not BlackRock. I think I'm thinking of something else. It doesn't really matter. Point is, I look at BlackRock. Not BlackRock. I look at Financial Juice to find these types of news. And we can see right here, 9 a.m. is a peculiar large candle. But why is it such a large candle? What made us have that large candle? Well, 9 a.m. is going to show us 8 a.m. here. It's the fact that it's 9 a.m. going down to 8 a.m., which is 9 a.m. EST. This is showing CST, 8 a.m. What do we have? Amazon inks a $38 billion deal with OpenAI to supply NVIDIA chips perfectly at 9 a.m. That causes price to then expand on indices, and that acts as a data high and a data low. Now, I will tell you, only look at significant candles. So like when you see this, you'll see that stuff constantly pops up. One, for the most part, focus on the stuff that pops up in red. And two, even if it does pop up on as red, if it doesn't have a significant candle like this, it's not going to be a data high, data low. Specifically here, because we had such a strong reaction off of that news back here, we can classify this as a data high and a data low. NQ then opens up at 9:30 by incorporating time, 9:30, significant time opening, and manipulates up. In this manipulation higher, immediately, because again, we leave right here at 9:30 Delphi's mark. So again, our entire basis of shorting today is the fact that we're in premium of every single range. There is no opportunity for us to long unless we were to return into discount of the range, or true day open, all that. So it's like, even if longs are going to be better for the day, we first have to go lower. And even if there's not a perfect setup, it's still worth it to at least take an attempt for shorts. Now, obviously, that's up for debate, but in this situation, when you understand higher time frame narrative, when you understand the weekly power 3, you can validate it. But anyways, on a lower time frame, 9:30 opens up right here, leaves behind a 9:30 30-minute power 3 devil's mark, runs out the data high. When we run out the data high, we then form a cracking correlation with, actually, is it this candle or the next one? It's the next one. We then form a cracking correlation with the previous woman high, as we can see right here. NQ runs out the previous woman high, while NQ, while ES and YM failed too. Now you might be thinking, but Fear, we just did that on the previous candle. Yeah, we did. But what did we not do? We did not get a 15-second CISD. You can see right here that initially we almost had a 15-second CISD right here. We almost had one again. But no, the only, again, like, it's not like I can just spam executions. I have such a precise entry model that you can't even fake this. Even if I were to demonstrate everything, you cannot fake precision and consistency like this. There's only one singular CISD you could have entered off of. Because again, you wait for 9:30 opens up, we displace higher. Even if you were to not look at anything else, if you just to simply enter off the first CISD, the only one you could have entered off of was the exact same one that I entered off of. And again, I forgot to say that before. My entry was based off of a 15-second CISD. As we can see up here. 15-second CISD, the very first one that was presented. Now, even if you missed the 15-second, just because you don't have access to it or whatnot, you still had access to the 1 minute. And the 1 minute CISD is just as valid. You enter there, right here, stop loss at the high, boom, you have a pretty precise entry. Because again, you're entering all the way in premium of the range above all true opens, above all opening prices for that matter. Premium of every single range, still significant ways from the data low. Logically, we're going to go lower. You enter there, and ultimately price plays out in your favor. Now, Fear was really a solid continuation model. In my eyes, no. When you use the time frame alignment that I use, there was no precise continuation lower until PM session, where we can see right here, PM session had returned into premium of the range, right here. Premium of the range, returning into premium. Why would we continue lower? Simply because we have still yet to fill this new log from this week. We simply just ran out. We put in equal lows with low of the day, failed to fill the new log from this week. So it's like likely we're going to play continuation low. Now, obviously, we're failing to do that today. The market just closed, but logically speaking, we're going to continue to head lower going into the rest of the week. But even if you miss the initial move, it's not a big deal. You just be patient, wait for a proper setup. You can see up here, price turns into premium of the range. In premium of the range, actually, let me look on the 1 hour. 1 hour time frame right here. 1 hour order block, lower time frame. When price mitigates that 1 hour order block, you can see right here we form SMT with the previous 9-minute high with YM. Boom, 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 boom. SMT the previous 9-minute high. From there, on the 1 minute time frame, let's see, what do we get? SMT with the previous. This actually is not that ideal now that I'm looking at this. Nothing too ideal to drop down to a 1 minute time frame, but right after you get a 5-minute CISD. And honestly, if you're entered there, that's actually pretty valid because your stop loss is only 29 points. And as you guys know, sometimes my stop loss is as big as 29 points. And in terms of risk reward, this offers a pretty good risk reward, just over 1 to 4. Now, obviously, if you were to properly manage your risk, this would be break-even trade as of now. You would have been broke even right now, or at least had it closed before market closed. But realistically, you would have trimmed at a logical place such as the true day open, which was also in discount of the range. And had you done that, you're locking in just over 50 points. If you're in with a singular mini, that's about $1,000, and that's more than enough. But specifically, that's about a 1 to, let's see here, let's fix this. Not even a 1 or 2, so it's not that good, but nonetheless, if you didn't trim there, would have been break even. So not that bad. And ultimately, that's how I found my narrative, or I guess that's why I shaped my narrative to be bearish. That's why I took shorts. So if there's any questions, comments, concerns, just list that in the comments below. Otherwise, hope you guys learned something. Whoa, we're pumping up quite a bit right now. 4 or 5. Probably have earnings, I'm not gonna lie. But let's check. US Treasury borrowing stuff. Actually, that was earlier. Who knows? It's probably earnings right now. But like I said, questions, comments, concerns, feel free to just ask in the comments or join my server, asking there. But otherwise, I'll catch you guys all in the next video.